All right, boom, we're live. Oh my God, I can't believe this. You guys, if anything goes wrong, if anything doesn't go as you guys think that it should go, you guys should let me know on Telegram, because this being my first ever YouTube live, you guys have to understand that, you guys, there's a big chance that Murphy's Law, one of the 3 laws of Murphy, it's going to do its job here. And that is, if something can go wrong, it probably will. Okay. So, there's a big chance that Murphy's Law, I'd like to bring up the chat. Where do I find the chat with you? I have no idea. Should be in docs, chat. Okay. I'd like to bring up. Okay, somebody loves my hair. You guys, I swear to God, I have literally no idea what I'm doing. But yeah, what a better moment to start than when you have no idea what you're doing, right? Okay, so guys, we're looking at trading view here, okay? I've probably already made you accustomed with me looking for SMT divergences with silver whenever I'm looking to take a trade, okay? You also know that I like to mark SMTs as my liquidity areas, right? So on the left side here of the screen, we have gold. On the right side, we have silver. And we're going to try to look for some setups. You guys, thank you for your good wishes in the chat. If you know where I can see the chat on my laptop screen so that I don't have to look at my chat on my phone, because right now I'm on my laptop looking at TradingView, and then I'm on my phone looking at the chat, right, to see if you guys are saying anything. So if you guys know where I can display the chat somewhere on the screen of my laptop, you just let me know, but do it on Telegram, okay? Okay, so someone's saying that there's an echo. Does everyone hear the echo? Just let me know, but do it on Telegram, okay? I don't know why I'm having a double sound. I have no idea. Someone's saying that there's an echo. Because on my end, everything is muted. And I don't know, I can only hear myself speaking, and that's it. Okay, maybe now the double sound is fixed. Is it, though? Is it? Anyway. Okay, so let's get back to the charts, okay? You guys know that I like to mark. Okay, so someone says there's no echo, no echo, no echo. Okay, so I'm assuming that the echo stuffy is fixed. Okay, so now it's okay. Okay, good. Now, you guys know that I like to mark SMT divergences as buy-side liquidity and sell-side liquidity areas, which is exactly what you guys can see in here. Now, the question is, for this trading session, what is gold going to do? And the answer is, I don't know. And to be honest with you, what I have been doing for the past couple of months is that I've just simply stopped focusing on where I think price will go next. Rather, I'm trying to focus more on what I think price will do by looking at what it's doing right now. Okay, so what I can see at this point is I can see that we took some liquidity, sell side liquidity. And hold on, because I need to find the brush in trading view, okay, because I'm not that good in trading view either. Brush, there should be something that I can draw with in here, and I know there is. I just don't know where to find it. Oh my god. Anyway, so I can see that gold took some sell side liquidity, right? You can see it marked here on my chart, and I can see that in doing that, it also created this bearish fair value gap that I'm marking right here. Silver did the same thing, obviously, okay? Now, I can also see that we have some buy-side liquidity left untapped right here at the top of yesterday's New York kill zone. And you guys can see that there is also some buy-side liquidity area marked in here, and I can go to a higher time frame so that you can see where that is coming from. So quite a while ago, about 2 weeks ago, I think, we had this SMT divergence over here, and that is basically untapped buy-side liquidity. There is also untapped sell-side liquidity right here at the low of March 4, right? So yesterday's low is untapped sell-side liquidity. By looking at the rejection that's going on right now on, okay, so someone says that the brush is under the rectangle. Oh my god, thank you. Okay, so now I can draw, you guys. Oh, look, it's so nice. Okay, how do I remove this though? I'll simply just delete. Okay. I feel like a dinosaur, honestly. I do. It's so weird. Anyway, so by looking at the rejection that we're getting from here, or that we might actually be getting from here, because for now we don't see any rejection whatsoever. Okay, and mind you, we're on the 15 minutes in here. So if I'd be seeing a rejection from this bearish fair value gap, right? What does it mean, a rejection? A rejection to me means that price, once it's in a sell side, in a bearish fair value gap, like we have this one in here, for me, a rejection would be to wait for a resistance to be formed, right? Now, what is a resistance? A resistance for me is whenever price is creating a bearish candle after it created a bullish candle, right? So in this case, it will look something like this. So this candle would make, would close like this, bullish, right? And after that, we'd be seeing like a bearish candle like this closing, okay? And to me, that would be basically a resistance that price is creating inside a bearish fair value gap, okay? So at that point, I would assume that this fair value gap, it's going to do its job and it's just going to keep price under it. And then after that, I would assume that price could have all chances to go lower to untapped liquidity a little lower, right? Now, what would I wait in order for me to take a long? Well, let's not forget we're on 15 minutes here, right? So by the time I would take a short on the 15 minutes, I might actually see that I've missed on the opportunity. Why? Because the next 15-minute candle, it might actually happen like this. Okay, so that would be a missed opportunity. What I can do is I can drop down to the 5 minutes. And what I can see here, to me, by the way, to me personally, the 5 minutes is, I should say, a lot more clear than the 15 minutes. And then the 1 minute was actually at one point, right? So one thing that I can see in here is that we have created a fresh SMT divergence, and I'll show you. So gold went under the low of the Asia session, also swept some old sell-side liquidity area, okay? Whereas silver didn't go at the low of the Asia session. Okay, now my wish would be, in order for me to consider taking a long, why would I consider taking a long on gold in here? Because we have untapped buy side liquidity. There you go. Okay, but also because we have just created a bullish divergence, and if we're gonna zoom in, we're gonna see that that bullish divergence is also followed by a bullish fair value gap. So to me, and I'm saying this and I'm like repeating this for whoever is for the first time here on my channel, or for whoever doesn't have like a clear logic about what actually an SMT divergence means. To me, it means that if gold creates a lower low, and of course, silver does not create a lower low, silver creates a higher high. The most important part that I want to see is that after gold created that lower low, it's going to follow with a bullish fair value gap. Why? Because think about it like this. If gold made a lower low, but silver did not, it means that these two are uncorrelated for now. And it's a little bit abnormal for these two pairs to be uncorrelated, because usually they just go hand in hand. When one goes upside, the other one goes upside as well, right? So it's weird to see that they're not correlated. So now when you see weirdness going on in the market, you have to ask yourself, okay, what does this mean? So to me, whenever I see gold taking out sell side or creating a lower low, now, mind you, I don't know if gold creating that lower low, it's breaking a structure, it's making a market structure shift, break a structure, whatever you want to call it, or if it's actually just sweeping sell side with the intention to induce traders to go short, but then it actually intends to go higher because there is untapped liquidity higher. Okay, so I don't know which one of these two it's actually going to unfold. So because of this, I'm simply just waiting for confirmation. Now, what does that confirmation look like? Well, to me, it's very, very simple. And that confirmation to me looks like, well, if gold made a lower low, this would be confirmed as a sell-side liquidity sweep, just a liquidity sweep. And now it might actually want to go higher if after it made that lower low, it's going to, one, create a bullish fair value gap, which it did in here, okay? And then two, it's going to reject from that fair value gap. And remember what I said a little earlier. What does rejecting from a fair value gap mean? To me, rejecting from a fair value gap means that you are going to see price not only creating the SMT, not only creating the fair value gap, but also, and the most important aspect, is that price has to reject from that bullish fair value gap. How? By creating a support. Okay, so what does the support look like? Well, it's very simple. You have price going down into the bullish fair value gap that it just created, and then it's going to create a bullish candle. And you have to wait for that freaking 5-minute candle to close. Okay, so in here, it's very, very important to be patient. Not patient as in a doctor's patient, but actually just show that you can wait for confirmations to occur. Okay? Now, this would be for me to take a long trade. But in order for me to take a long trade in this scenario, I have to wait for the confirmation candle. Okay? And for now, I'm not getting that. I have the SMT, I have the bullish fair value gap, but I don't have the rejection off of it, right? So it's still 2.5 minutes until this candle is going to close. And it might not close bullish, but it doesn't mean that if this candle will not close bullish, it doesn't mean that it's the next one would not be able to close bullish. Okay, one thing. Now, if we go back to the 15 minutes chart, we still cannot deny the fact that we are rejecting from this huge bearish fair value gap in here that you see marked on my screen. Okay, this one. Now, we've also had, if we're gonna look at chart, we've also had some bearish SMT divergence. Okay, now a bearish SMT divergence means what? It means that gold created a lower high, And then at the same time, silver created a higher high. And after silver created a higher high, it also created bearish fair value gaps. So gold at this point, okay, it's showing weakness. To me, this is what this type of SMT means. It means that this market, which is gold at this point, it's showing weakness, okay? And if we are going to zoom out a bit, we're going to see that it seems to be creating some sort of resistance, right? Now, on the other hand, silver could be telling us some very important information about whether this market will eventually show weakness or not. How? Well, you see here that on silver I do have this S&P buy-side liquidity marked, which you can see that silver took out, and after that it also created this pink, red, whatever color you see it, SMT divergence, and then it created bearish fair value gap and rejected off of it. Now, I'm not trying, and I don't advise you to trade silver, okay? Because we're using silver in here as an indicator. Indicator of what? Indicator of weakness versus strength, okay? So, if I would be looking to take a short, I would be looking to take that short on gold, not on silver, okay? Now, the reason why this short idea would not make sense in here, it would not have made sense to take this drop, and it would not make sense to take a short off of this fair value gap either, for me at least, okay? For me, based on the logic that I have for SMTs, it does not make sense for me to take a short right now because of the following. If you want to take a short, you have to think of SMT in a logical perspective, from a logical perspective, right? So if I have an SMT where, hold on, let me just do this. If I have an SMT where gold is going to create a lower high, okay, and silver made a higher high, right? To me, this is SMT, and you know, it is, right? Lower high, higher high, right? So to me, at this point, the way in which I would see this as a weak market for the asset that I am looking to trade, which is what? Gold. I'm looking to trade gold, so I want to see signs of weakness on gold, not on silver, okay? I'm not interested to see that once silver swept the buy-side liquidity above that high, it's going to create a bearish fair value gap. I'm not interested to see that. Why? Because I'm not looking to trade silver. I don't want to see signs of weakness on silver, because to me, this drop in here on silver could be just an inducement, just as it could be an inducement, this drop on gold, okay? Inducement, aka sweeping sell side, inducing smart market participants to go short so that smart money can go long, right? Now, in the context of this type of SMT divergence, if you go to your SMT textbooks, whatever, you're going to see that this type of SMT is a bearish continuation SMT, okay? Now, bearish continuation SMT means, provided of course that this in here is gold and this is silver, okay? Now, bearish continuation SMT means that in order for something to continue to be bearish, it should have been already bearish, right? Now, we're trying to trade short term. Looking at this short term market, for now it has been bullish, okay? So how can something which has been bullish continue to be bearish? It cannot. In order for something to be bearish after it's been bullish for a while, I would need a reversal SMT. Reversal SMT means that gold should have been the one making a higher high and silver a lower high, which is not the case in here, okay? So this is a bearish continuation SMT. First, it doesn't make sense because for now, like intraday wise, gold is not bearish in order for it to continue to be bearish, okay? Second, the logic of SMT plus FVG plus fair value gap, the order in which one has to follow the other, depends a lot on the type of SMT that you get. So if this is a short continuation SMT, what would need to happen is that in order for this to make sense, based on my logic, again, I'm not saying that what I'm, I'm not claiming that what I'm saying here is the be all end all of everything and that you should only listen to what I say. No, I'm saying that this is the way in which I'm interpreting price action in these PD arrays. Okay, this is the way in which my logic works in regards to these things, right? So the combination of SMT plus fair value gap in such a context where we see gold making a lower high and silver making a higher high, right? So in other words, gold was, in other words, gold was going higher, right? And at one point it can't go higher anymore, but you're overall in a bearish market, right? So you're coming from a bearish market and this pushed to the upside and here was just a pullback, okay? So to me, this is what has to happen first. I don't know if that's the case or not, right? But I can look for other confirmations. So in order for this SMT to make sense, I would want that on the first leg of the SMT, which is what? This one. This in here is the first leg of the SMT. Okay? So in here, I would have wanted to see that there would have been some sort of bearish fair value gap. Okay? And that as gold goes up to rebalance that fair value gap and then find resistance there, right? And then go lower. During that time, when gold goes up and stops inside that fair value gap, creating therefore the lower low, at the same time, silver goes up and sweeps buy-side liquidity and then rejects. And at the same time, with silver rejecting from having taken buy-side liquidity, also gold rejects from the bearish fair value gap. Now, if we were to assume this, okay, let's just remove all the drawings. How do I remove all the drawings? Do I just have to select them and just manually remove them? Yeah, I guess for now I'll just do this and then I'll just learn how to do things. Okay, so now, assuming this logic that I have for S&P, it means that this push to the downside over here, this is the first leg of the SMT, and then this push to the downside in here, it's the second leg of the SMT. So this means that as gold was going up in here, silver was going up in here, making a higher high, right? So it means that I should have seen gold going up in here. Why? To rebalance whatever bearish fair value gap there would be on this first bearish leg of the S&P. Now, do you guys see any bearish fair value gap here? Like, let me just remove the drawings. And I'm really going to zoom in. Really going to zoom in, like really zoom in. And I want you to focus on this piece of price action. This one that I've put the yellow rectangle on. Do you guys see from this high all the way down to this low? So on this piece of price action, do you guys see any bearish fair value gap? Because I don't. So to me, it doesn't make sense. The price would actually go short in here. Okay? To me, it means that this push to the downside was a liquidity sweep. Okay? So now I'm going to go to the 5 minutes chart, and there you go. You have a long entry confirmation, which happened about 10 pips ago, let's say. Okay? So remember, we have the bullish S&P where gold took sell-side liquidity from the low of the Asia session, which is something that silver did not do. Okay? And then after gold took out the low of the Asia session, it then created a bullish fair value gap. It actually created two bullish fair value gaps, these two, okay? Now, what I want to see in order for me to take a long trade in here is that I want to see a rejection, right? A rejection from the bullish fair value gap, which I do see, okay? So at this point, this candle over here, this one, the previously closed M5 candle, to me, this would be an entry candle. Now, where would I have my stop loss over here? I would have my stop loss right under the rejection wick that occurred in here, and then I would target at least a 2R, which is like this, okay? If I were to take this trade, this is the way I would take it at this point. Now, I'm not going to take the trade, and maybe you're wondering why. Because it's my first time broadcasting live on YouTube. I am literally shitting my pants with emotion. And I don't know if whatever I'm saying here or whatever I'm doing is actually something that I'm actually thinking in advance. Okay? So I might be wrong. Therefore, because I really want to get used to not having any sort of emotions while I'm doing these live streams, because yes, they are coming in. I really want to make them stay. I'm not going to take this trade because I might actually fuck it up. And I would definitely recommend anyone who's watching this live stream right now, don't do anything. Just watch price action. Don't take any trade. Don't do anything. Don't take my word for it. Just don't do anything. And if price starts to shoot up and you're thinking that you want to get in the train, just don't. Okay? Whenever you feel FOMO, it's time to go slow-mo. Okay? I've heard this from Alex Hormozy and it served me really well. Now, things that I would, if I would be in this trade right now, things that would make me want to get out of the trade before hitting my stop loss, obviously, right? Would be, for example, to see that I'm going to see price creating a new SMT divergence that would be like a bearish reversal SMT divergence. What does a bearish reversal SMT divergence look like? Well, we would see gold creating a higher high and silver creating a lower high, okay? Which is what we're slightly starting to see in here. Now, we don't know if this will eventually, if gold will eventually reject from having taken this minor high in here, which corresponds to this high in here, okay? And we don't know if silver is going to reject from here, right? So for now, there is no SMT, right? To me, an SMT is going to be confirmed whenever a bearish fair value gap will follow after it. So if I see gold creating a higher high and silver creating a lower high, gold creating that higher high, I will consider it like a buy-side liquidity sweep with the intention to actually start to go lower only after gold will create a bearish fair value gap, okay? In considering this aspect right now, for the way the market looks like right now, I would want right now to drop down to the 1 minute chart and see whether price will create any sort of bearish fair value gap after it took out this minor high in here. Why would I want to see this on the 1 minute and not have to wait for it on the 5 minutes? Because we're looking at a minor high, okay? This is not a session high. It's not a kill zone high. It's not a daily high. It's not anything like that. Okay, it's just a minor high, and it doesn't mean that much. Okay, so I just don't want to wait for a confirmation of it on the 5 minutes, because think about it like this: the more important the level that you're looking at that's being swept, or you know, maybe a fair value gap that price is rejecting off of, the more important it is, it's going to be given, in my opinion, by whether it's on a higher time frame or not. Okay, now this high, this little swing high in here, is visible on the 1 minute and on the 5 minute and probably on the 15 minutes equally. Okay, so What would make it be less important at this point is just the fact that it's a minor swing high in the middle of the session, and it's not actually the high of the session or the high of the day or whatever, okay, or the high of a previous session or the high of a previous day, right? So I would not want, because this is not that important of a minor high, I would not want to wait for a confirmation of this SMT on a big time frame, which to me, 5 minute is slightly bigger, and to anyone, right? It's slightly bigger than the 1 minute. So I would not want to wait for a bearish fair value gap to happen on the 5 minute, because I might actually miss on the opportunity. But being like a minor high, I can drop down to the 1 minute and see whether the 1 minute will create a bearish fair value gap after taking out that high, considering that silver will not take out that high. Okay, and if that would occur, then I would consider closing my long position, not taking a short position. I would not take a short position if that would happen. Okay, why? Well, just think about it. For the same reasons why we just discussed a little earlier, that we wouldn't consider taking a short here based on that SMT. Why? Because we should have had a bearish fair value gap on this first price leg of the SMT, and we did not. Okay, we did not. So because of that, I would not take a short. Okay, but if my long entry confirmation would be in danger, right, by any sort of price action that would occur, this would be the piece of price action that would actually make me reconsider whether I still want to be in this long trade or not. Okay, now another thing that I also want to pay attention to is this minor fair value gap in here, that one. So I really want to pay attention to what price will do, if it's going to have any sort of reaction after taking that out. Now, you can see that that minor SMT that we were looking at previously, it's not valid anymore, because also silver broke the corresponding high on gold in here, which is this 1905. Okay, so we're not talking about any sort of bearish, possible bearish SMT. Okay. Someone's saying, TJ, I will become the new Tanya Trades. Yeah, who knows? I like her, by the way. I like every YouTube Forex live streamer out there. I'm not watching any live streams, but I randomly just click on their live streams and just look at their vibe and their energy. And I really like Tanya, even though, and she said that so many times, she's boring. But it's good that she's boring, okay? I like the boredom that she brings to the table, because it's not distracting. I like Raja Banks. Also, he's super energetic, and he's the first YouTuber, like Forex YouTuber, live streamer, whatever, that I've seen, that I've watched. And then yeah, there's ICT and others. Okay, guys. Ask me questions, because I don't know what to fill this time with in this space. The trade, if I would have taken it, it would have gone and would have done so well. And looking at the way this candle is currently developing here, it doesn't really look like it will reject from this fair value gap here. Who knows? This one. Maybe it's not going to reject, and maybe, and I honestly think it's going to do that. Maybe it's going to go to here. Now, what is that? That's buy-side liquidity area. Why? Remember what I said at the beginning of the stream. For me, buy-side liquidity areas and sell-side liquidity areas are areas where I previously saw SMT divergence. James K. Guy, if I'm reading this chat or Telegram, I can actually read both chats, but I don't want to do it, so I'll just read the YouTube chat. Okay, someone's asking, in this trade, when would you move stop loss to break even? I would definitely have moved stop loss to break even once I would have hit 1R. So if this is 2R in here, 1R already happened when the previous candle closed. So technically speaking, if I would be in this trade right now, my stop loss would already be at break even. And to be honest with you, how much did this move? 2903.50 to 2903 to 2913. This is already 100 pips. Okay, so it's a $10 move already. I would have been out of this trade, but not entirely. Like, I would have been out of this trade, I think at 1R with at least 50% of the volume that I got in. And then I would have been moving stop loss to break even. And I would leave the runner, whatever that would be, to not just go for 2R, but I would actually want it to hit an area of buy-side liquidity, SMT buy-side liquidity, by the time I would consider taking some more off from that runner, right? So the next buy-side liquidity area basically would be around here, okay? 29.19, exactly like Rob is saying in the chat. Rob is also wondering if the gold price action will hit the highs above your trade take profit. I'm assuming it could do that, but I'm also assuming it might not do that, okay? It really all depends. And by the way, guys, you are, like, you're not, but considering that I would be in a trade right now, my job as a trader would not end here. Okay, I did the easiest part. I opened the trade, but now I have to do the hardest part, which is to manage the trade. Managing the trade means deciding when to take partials, deciding if you're going to leave a runner and how much of a runner you're going to leave, deciding when you're going to move stop loss break even, accepting that more often than not, your stop loss put at break even could actually be taken out and then price continue to go in your favor. But guess what? You're not in the trade anymore. You also have to accept this, have to see it as a possibility and accept it. You also have to make sure that whenever you're seeing signs in price action that might not be in alignment with your analysis anymore, you will consider taking off some of the risk. What would those signs look like? Like, for example, what I see right now, right? It's this high over here, and I would pair it with this high, okay? If I would see that silver would start rejecting from here and gold the same, but gold would not take out that high, but silver took it out and it would start to reject, to me that would be a sign of maybe price is not looking to continue any further upside without first making some sort of a pullback. Okay, TJ is asking me if I use funding firms. Yes, I do. I use FundedNext. It's the only one that I ever used and the only one that I'm currently using. I also have a small live account that I trade whenever I took a trade on my funded account. Doesn't matter if the trade that I took on the funded was a winning trade or a losing trade. If I'm going to see like a new opportunity to take, I'm not going to take it on the funded account anymore if I've already made money or lost money on that account for the day. I'm actually just usually going to take a trade on my small live account. Okay, now silver took out some buy side area from here, which that high corresponds to this high on gold. And yes, Sapman, silver is running faster than gold right now. But you guys, I'm sure, if there's something that I'm totally sure about, 1000% sure about at this point, is the fact that at least one person inside this live stream has taken this long setup on any sort of account. If you did that and you're not taking profit already, I don't want to be disrespectful and say that you're STUP. ID. But I'm going to say this. You're playing with fire, okay? If anyone took this trade, you got to take profit. Don't wait for price to hit this area or this area or this area, because it might not do it, okay? Always look for whether you are happy with the monetary value of the profit that you see in your P&L, okay? Once you're happy with that, take it home, put it in your pocket, and then you can leave a runner. You guys know that I'm a true advocate for this. I'm never going to change my opinion about this. It's the only constant that has remained a constant in my trading activity so far. I've changed strategies. Okay, Sean Badger. Sean, I'm going to kill you. He did take the trade and he did cash out. Well, good for you. Good for you for cashing out. Not so good for you for taking the trade. If you did take the trade, because of your own analysis and not because of what I said in this live stream, then good for you for taking the trade as well. But otherwise, if you only took the trade without actually knowing what you're doing, just because you heard me say that, oh, we had a long entry confirmation here, no, stop it. Okay, someone's saying that that's a good 1 to 3R. Not really, it actually just went to 2R, 2 point something, 2.2. And now I want you, so technically speaking, if this would have been a trade that I would have taken, okay, I would already be out with most of my profit right now, with most of my position. And we also got a 2R. So right now, if you are amongst the traders, amongst the people who took this trade, and you closed most of your position, and you've also secured your runner at break even, there is literally no reason why you would still be in front of your computer right now. Literally no reason. So there's 81 people watching this live stream right now. And I really want to see at least the 2 people who admitted in the chat, which are, who's that? Who were they? Those were, oh my God, I can't find you. Sean and James. Sean and James. No, TJ, sorry. Sean and TJ. You guys are the only 2 who admitted in the YouTube chat that you took this long trade. You should literally get out of the live stream. Okay, now there's 82 people watching this live stream. And I should see 2 of you getting out. Okay? Because if you made money and you're still here, actually, you know what? Just close your computer altogether, but you can watch me live streaming on your phone. Okay, just don't get out of the live stream. Okay, 77 people in the live stream right now. I think some of you guys are already following my advice, which is very good. Now, whoopsie. M-Trace didn't take it, just watching. Very good. Very good that you didn't take it. The reason why it might not necessarily continue to move higher is because silver already took out the buy-sell liquidity above here. And gold did not, okay? So it might actually want to make some sort of a pullback prior to continuing to go higher, or not. I don't know, okay? The thing is that what I would not like at this point, and if I would have been in this trade, I would definitely consider taking some more profit, would be the fact that I see some form of rejection starting to uh, to form in here on silver. Okay, so you don't know what price will do next, right? Therefore, if you made money, if this trade loses, my funded will be blown. TJ, well, let me tell you this, TJ. It's just a friendly advice that you didn't ask for, but I'm going to give it to you anyway because I'm a good girl. Okay, so about money. If you can't afford to lose it, then don't use it. Okay? I wouldn't, no, I wouldn't. If I would be in a profit at this point, and you said that you are, that you took the trade and then you're going to hold it to, I am in to still holding till, I think you meant 29, 20, I don't know what you meant, 29, 28, I think you meant. 29, 29, 88. I think you meant till here, right? If you're in profit, if you entered here, right, which is 29.04, let's say, and right now price is at 29.14 almost, so you're 100 pips in profit, and you still want to hold for an additional, how much? For an additional 150 pips, but you did not take any profit. Trust me when I say, and I'm sorry to say this, but it is what it is. If this trade will be a loss for you, you deserve it. If you're at risk of losing your funded because of this one trade, which is in profit, why the heck would you not take most of the profit off, especially since you're 1 foot in the hole already? Actually, 1 foot, 2 hands in your head, and you just have the other foot which is outside of the hole. But you still stubbornly wait for what? For price to just shoot up there? Like right now on the go? No, that might not happen. And if you were 100 pips in profit and you're at risk of losing your funded account with this one trade if it goes the other way, and you're not taking any sort of profit to just increase your leverage that you have, to just increase that buffer, that amount that you are allowed to lose from your funded. Like right now, let's say that you're at risk of losing your account because if this trade goes the other way, you're going to lose the last $500 that you're allowed to lose from your funded. Okay, if that's the case, and you're right now $300 in profit, and you're not taking 200 out of that to increase from 500 buffer to 700, like, just think about it. That's a 40% increase in the risk that you are allowed to take per day, considering your stats right now. And if you're not doing it, you want to lose. You want to lose the account. You want to blow it. Sorry to say this, but it's just pure math. Yeah, Leo is right. By the way, I'm reading the chat on my phone. Leo is right. This is a great stream, and you guys should smash the like button. So why aren't you doing it? Just like the button. Like the stream, okay? It's the first stream, my first stream ever, and you're not liking it. I don't know why, or at least you're not showing that you're liking it. Sid is asking, if this BC was not respected, but price closed above the fair value gap, would that still count as trigger? Sib. So what you're asking, I'm trying to see if I understood your question. So you're talking about this BC, right? If this BC was not respected. But price closed, closed back above the FVG. But price closed back above FVG. That's the thing. That's what you want to see. A BC being respected, price closes above it. Oh, maybe you meant, I don't know, that initially it closed under the fair value gap and then it closed back above it? Sid, you said a yes. I'm assuming that you answered yes to me asking whether this is the fair value gap that you're referring to. But now maybe you could answer whether you're saying if price closed under the fair value gap and then closed back above it. If this is what you mean. And if this is what you mean, then you would consider this as a reclaimed fair value gap. And I would definitely consider still taking a trade under certain circumstances. One, if price did not go under here, as it closed under the fair value gap, this one, it should not have gone under here. And if it did, it should then create a new bullish fair value gap, and then I would wait for a rejection off of the new fair value gap. And definitely, I would also want to see that if gold would have done that, silver would not have done that. So silver would have created a higher low, as gold would have created a lower low. This one thing, okay? So the low should not have been violated in price closing under the BISI. One. The other thing, the other aspect, and this is not, it's either this or that. It's ideal that all of them happen, right? The other condition, apart from not going under this low, is that price does have to close back above the fair value gap, okay? After closed under it, but still respecting this low, it has to close back above it. This is the second condition. And the third condition is that I want to see price actually not just closing above the fair value gap, but closing above this high, okay? That's the actual condition. And then another condition is that in doing so, in going above that high, I want to see price creating a new fresh bullish fair value gap. And I call this like an inception fair value gap. Inception fair value gap to me is when you have a rejection from a fair value gap and then price continues to create fair value gap. So it's a fair value gap that creates as a rejection from a previous fair value gap. Okay? To me, that's like inception fair value gap. And if I see all of these happening, then yes, I would still consider the validity of this fair value gap and I would still take the trade. I would still consider my buy idea valid. But of course, it really depends how much above this high price closed, because you might actually be increasing a lot your stop loss. Okay, so you really want to pay attention whether it's going to be worth it to increase your stop loss, or you might actually want to wait for another pullback to some sort of area fair value gap that you see around here, and then wait for a new rejection, and just make sure that there's no other bearishness showing ahead, right? Like in the form of an SMT. So you see, this is why I said, you guys, you need to take profit, okay? You need to take profit, especially when you see the following things. We were at an hour of the day when it's likely for stuff to happen, movement. Volume comes into the marketplace usually after 9:30, okay? When our entry candle happened, that was the candle that opened at 9:20, so it closed at 9:25. So basically at 9:25, 5 minutes before the market opened, we actually get into the trade, okay? That's when we got into the trade. So we're expecting volatility, which we had, okay? We did get it, right? Now you're thinking, okay, with that volatility, why isn't price continuing to go higher and sweep the levels that silver already swept? Why does it seem to create some sort of resistance? Okay, and if you're seeing silver rejecting from after taking buy-sell liquidity, and gold is just creating a local resistance, or it doesn't show signs of continuing in the same direction with silver, because honestly, this is what's going on in here. This could change within the next 5 seconds. Within the next 5 seconds, the candle could close, could turn bullish and just go up. But for now, I'm just talking from what I'm seeing that is happening at the current moment. And this is what I'm seeing right now. I'm seeing silver having taken buy-sell liquidity, showing some form of rejection. For now, this is some form of rejection. The fact that this candle did not close, it's not a confirmed rejection, okay? This current 5-minute candle on silver did not close yet. So it still has 1 minute and 48 seconds to turn bullish and to continue to push higher. Okay, so for now, it's just like a in progress rejection. It's not a confirmed rejection, but still. Alex, very nice job explaining all of the steps and taking this trade. We'll be reviewing this video again and again. Thank you, and yes, please guys, review the video. Also make sure to like the live, live the live, live the life, like the life, like the life, like the life. Oh my god. Okay, Sean took his profit. He said that he's going to log out for the day. Good and wise decision. Rob, looks like it dipped into a balanced price range. Yeah, but I'm assuming you're talking about this one that we just removed a little earlier. It did, but the question is that all that it's going to do? Is it going to stop here? And the answer is, who knows? And who cares? You just have to make decisions on the spot, depending on what we see that's going on right now. Okay? And right now, I would definitely not be in a trade anymore. We're probably going to see gold doing some sort of something like this, but maybe not, who knows. Yeah, let's see if it's going to do that. Silver, for now, silver, despite having closing that as a bearish candle, you see, seems to be wanting to go higher. I wonder why and where. Is there something higher that silver has around here? Okay, so the next buy side liquidity area on silver, it's pretty high. I'm not sure if it's going to move till there, but who knows. And wait, because I'm seeing something very interesting in here. This is also a buy side liquidity area. And it's because we had some form of equal highs in here, you guys. Can you see it? On gold, like that. But on silver, this has been so bearish, like that. You see? This is like an extended divergence. It still shows that these two pairs were out of correlation, right? As one was trying to go higher, but it couldn't. It just created resistance here. The other one was showing early signs of weakness, okay? So during that time, what time? What time, Alex? This time. This piece of price action over here, which coincides with this piece of price action over here. You see, if you watch the cursor, you're going to see that time-wise, I'm just marking these areas, and they just belong to the same time in the chart. Let's go back to the 5 minutes, see what's going on. Okay, so just like I said earlier, this is what gold did, right? Made a little dip, and then because price is already too high in order for me to take a long trade, because I always ask myself, if I'm going to go long right now, where am I going to put the stop loss? And the answer is, well, Alex, if you're going to go long here, your stop loss would not be normal for it to be here. It would have to be down there. Why? Because this is the last rejection that you got from a fair value gap. Okay. Not to say that also price could actually take out that low, only to then reject and go higher and still have this low over here respected. So it would just take me out, only to then continue to go up. And I've just made the stupid decision to buy at a high price. So at this point, I wouldn't know what to trade, okay? I wouldn't go long because it's already moved too high. And I wouldn't go short because I don't have reasons to do that right now. I just don't, okay? I don't. Even though we have this SMT, I don't see any bearish fair value gap on this leg that was unbalanced and that price came up to rebalance it, and now it's rejecting off of it as silver is rejecting from having taken buy side above that high. Okay, I don't see that logic. So I don't see a reason to go short and to go long. It would mean that my stop loss would be too big. Maybe I could go long on the 1 minute, but not really, because I just want to stay away from the 1 minute, especially with the S&P divergence. But yeah, no, TJ, I'm not cutting out. I'm talking a bit, not that loud, because I was mainly talking to myself, you guys. Okay. I don't think it makes sense for me to still stay in this live stream. I don't know, we've been live for the past hour. I think it's enough for my first day. I think it's enough 1 hour of a live stream with a successful potential trade that some of you took and made profit with. And by the way, should I say, okay, I'm going to say it. This is not a financial advice, okay? Whatever I'm saying here, whatever you see me marking on a chart, it's not financial advice. Just make sure that you're not going to risk more than you afford to lose. If you can't afford to lose it, don't use it. And I'm talking about money right now, okay? Yeah, I think that's going to be it. And I'm just going to say goodbye for now, guys. These live streams, yes, we're going to make it a usual thing. So expect to see me again tomorrow at around the same hour. Woo, and gold seems to be going higher. So if you guys are still in trade, you got to take some profit at this area over here, okay? Or at least wait to see if you're going to see some form of rejection from there, and if you're going to see like a 1 minute bearish order block forming or something like that after gold will take out that high, or including right now, just do it. Get out of the trade, or at least secure your profit at break even. So yeah, guys, thank you for being here. Just like this, because I really want to make this work, the live streams, because I have so much spare time right now and I have to do something with it. And I figured that going live on YouTube every day, it's going to help me, it's going to help you, and it's also you also need to help the algorithm to push me forward. So yeah, just like the button. Yeah, hit the like button. Bye.